Good evening. In this video we will have a look at the story of a friend I know who really a smart guy, and he does the same as us. We look for dividend stocks and good companies. But what I learned from him when I met him in Norway and on a boat on the way to in the West Fjords of Norway there, he was a very smart guy, and he always was looking for those companies that pay like really high dividend compared to the shares and the share price, and who doesn't want that? So he always liked to buy the most amount of dividends. So he looked at, for example, he was sitting at his PC there in Bergen there, and he would see that the shipping company here was getting a 12% dividend yield, and it was great. It was like he invested for cash flow, and he thought it was a lot of fun to have all of these high yield dividend stocks, and he would see on his phone that the cash flow and the dividends would come in every month, and it was a lot of fun, and keep picking those cheap high yield dividend stocks, and it was great. But then it was like a really great feeling. He had like 600 euros or dollars in dividend income a month, and then if he just continues like this, it would be just great, as he was saving more and buying more of these. So he didn't see why buy just like Coca-Cola shares or these 2% paying stocks when he can get 10 or 12% right now. But then, for example, he loved those shipping stocks, and he had this big the biggest newest company was this what was it, sinking ships logistics, and paid a really high dividend because the share price was so low. But he didn't care about the share price because it was he would get a higher yield when the share price was dropping. But then the company, the stock was just falling and falling for months and months, and he got this notification from the news of the company, and they stopped the dividend, and that's just, he told me that was just so that bad feeling there. And then the stock also dropped 40%, and just in one single morning, and it wasn't just once, it was also he had the real estate real estate funds that also paid almost everything in dividends. They also slashed in half, and it was kind of a guaranteed income, at least before, but now he didn't know. So like in just a half year, he had the whole portfolio that was just dividends. It was just he didn't know. Now it was like down 50%, and the dividend notifications was now not as much as before. So it was kind of the only thing he cared about, and that was now not there anymore. So then he said later that he told me later that he was sitting in the cafe in Bergen there, and he in this town of West Norway, and he was very sad about it. And then someone he knew there came over to the table and saw that he was sad, and he knew that this person kind of always was quiet and all, but also investing, and then he asked, came to this the friend of mine here, and asked if he was worried about the stock market falling and everything there, and so and then he tried to show him that he didn't try to get the highest dividends right now. Yes, the market fell, and maybe that was just bad companies, but imagine if he would next time now save a lot of money, and then buy this buy this farm, for example, just a boring kind of company, but he would buy the farm, but then go and buy the oldest cows there, and the sickest cows, and then hoping to get the most amount of milk before they die. But then is that any good? Because yes, he would get much more milk dividend from the cows, but maybe it wouldn't last that long. And that made maybe sense. So he, so the person that approached him was not buying the oldest or the most cheap cows or assets, but he showed him the phone and showed examples that he would buy companies then that paid maybe 2 or 3%, and that was very boring. Why so? But yeah, he doesn't like. It's not so much income now, but he's been doing it for 10 years, and he doesn't. It's not the same dividend every year. It actually grows by 8% or 10% every year, and they have no debt really, so they have a lot of cash and they just grow their income. And so he didn't chase the yield, he said to our sad friend there, but he was chasing the growth and how much it's growing, this dividend, every year. So the 2%, he said, that the friend there that is paying, it was paying 2% 10 years ago. Now it's paying 15% on the original investment. So that was, the stock price had tripled, and it couldn't really go bankrupt because it had a strong balance sheet and no debt. So instead, my friend there, to try and squeeze the last lemon juice out of the lemon, maybe he could plant more lemon trees instead, even though it takes more time, but it will only grow from there. So that kind of idea for a sad friend there kind of sounded pretty reasonable. He did buy these old assets that would go out of business, and they would be paying back the dividend as they were going out of business. So maybe then when he came home, he looked at his portfolio and saw what kind of businesses would do this kind of thing, that instead of buying these sinking ships, he found this quote of Warren Buffett there, that it's maybe better if he has like a chronically sinking boat or sinking ship, it's better to use the energy to change the vessel entirely, and than trying to patch the leaks for all the time. So he then sold his companies and tried to find those strong balance sheets where the capital would not be lost, and the income would actually grow a little bit every year. So 5 years later, when I met him again, he still has the dividends on his phone, and he says that they actually are more than last year. And even though the stock market swings a lot, he just shows the graph every year. It's more dividends. So it's not like a lot and flashy numbers or so, but he knows that it's stronger every year. So it's kind of a growing income every year without any stress. So that's and also kind of the capital is safe. It always has a good return on the capital, and that's and the income also, the dividend income is growing higher than the inflation. So that's he told me that, and that was nice to see, and he's still happily investing. So I guess the goal now is not to get the most dividend yield today, but rather see what we can get in the future, and see where in ice hockey, not where the puck is right now, but where is it going to be 5 years from now. So that would be a long ice hockey field, but you get my point, I guess. Yeah, so this is what we look for more in the channel. It's not necessarily the highest dividend yield right now, but more dividend growth investing. But if you want to see this kind of treasure hunt, we will be looking at it together. I use, for example, a screener here in Fiscal, for example. Here you see my watch list of these kind of companies that have really, really strong balance sheets. I think all of them really have that, as you see here on the list. And I think all of them in common, they have growing earnings and growing dividends. I cannot spot a single one. I think that maybe Heinz is not as good, maybe, but it's a great company, but the whole package maybe, who knows. But all of this is what the channel is about at the moment, to try and find great businesses. And even though they are expensive, let me just show you this one, for example. Texas Pacific Land Corporation, just as an example, and we will get back to examples and do the treasure hunt together. But if you see, for example, let me just show you what I mean. Imagine if he had tried to buy this dividend-paying company. Let me see, can I get the dividends? Let me show you just the cash flow from dividends here, so we see what we mean. So, and it's not that much here. Let's see. Can we get a good number of this? Yeah. Here you see, for example, if we had been there in 2018, for example, or back here in the earlier years, we would maybe get 30-40 million entirely in dividends. And maybe we would have to buy the whole company, let's say how much it was trading for back then. I'll share the market cap with you so you can get an idea of the comparison to our story. So let's say here, let's see, if we looked, for example, back here, I'm doing this a bit on the direct here now, so let's just have a look. It's easier, by the way, to show it per share, but I'll show it more appropriately later. But here you see, for example, you could buy the whole company for $3 billion here, or in 2020 for 2 or so, and then in let's see here, in 2018 or 19, 1 or 2 billion for the whole company there, while the dividends were very small. It's like that looks really small, but over time it gets really high. I don't know if this is the best example, but we look then at these companies that are actually just growing their dividends and have a really strong balance sheet. So here, for example, I'll show you more about this one. For example, it just owns land in Texas and has lots of cash, you see, and lots of land, and then no debt, really. So they just grow. The capital is always growing. You see here, the capital is always growing and growing, and the dividends follow as a percentage of this earnings potential. So if that was interesting, we will have a look at that and many more good companies where we have growing dividends, and hopefully we can get the shares at a discount also. So thank you for watching. We will be on the treasure hunt in the next videos. They are mostly expensive, but we try and be ready. And sometimes when the market falls a lot, we can get an even higher yield in the future if even these good, really great companies also get too cheap. So I hope you like that kind of content, and feel free to join. We will set up some meetings also if you want to join and look for these kind of deals together. Okay, hope to see you in the next video.